Hey, it's Linus here. In today's video, I'd like to share with you my thoughts on the Fed's transitory inflation in 2021. If you haven't been living under the rock for the past couple of months, you know that inflation numbers have been relatively high. In fact, if we take a look at the inflation numbers in the US in May 2021, we see that the consumer price index for all urban consumers increased 0.6% in May on a seasonally adjusted basis after rising 0.8% in April. And over the last 12 months, the all items index increased 5% before seasonal adjustment. And this was the largest 12-month increase since a 5.4% increase for the period ending August 2028. So if we scroll down on this inflation report, we see that the 1-month percentage change in CPI for the month of May 2021 was 0.6%, which means that inflation in the US for the month of May 2021 increased 0.6% from the previous month, which is April 2021. So while inflation in the US has been increasing month over month since October of last year, but for the month of May, even though inflation was positive and has increased from the previous month in April, inflation is increasing at a decreasing rate. So that's also something to pay attention to. That's the month over month data. Now let's take a look at the year over year data. And for this year over year data, we'll be taking a look at the blue line, which represents all items. And for the month of May, we see that the 12-month percentage change in inflation data was 5%. So what this means is that we are comparing the prices of all items in the US in May 2021 versus a year ago. And the percentage change compared to a year ago is 5%, which is the largest percentage change in the US in almost a decade. But let's put aside all these official numbers and figures on inflation data for a while. We don't need these numbers to tell us that we are currently facing inflation. The question is not whether we are experiencing inflation right now, but rather how long will this inflation be here to stay. I believe that inflation is transitory, so in today's video I'll be sharing with you the reasons why I believe inflation is transitory in nature. We'll first take a look at the definition of transitory inflation. Transitory inflation is defined as inflation that is brief in duration, tending to pass away and not persistent. The Fed believes that inflation is likely to be slightly higher than its inflation target of 2% for this year and next year, and they believe that inflation is likely to start declining in 2023. So for the Fed, transitory means a year or slightly more than a year, because from now till 2023, it's slightly more than a year. So the Fed believes that inflation is likely to be at a slightly higher end of their inflation target, which is 2%. So they believe that inflation is likely to be slightly higher than the 2% inflation target for the next 1 year or so. And starting from 2023, the Federal Reserve believes that inflation is likely to decline from there. And that is why they believe that inflation is transitory in nature. And I'm also on the side of the Fed on this one. I know that there are a lot of people out there who do not believe in the Fed's inflation outlook. They believe that the Fed is downplaying inflation, and some even believe that inflation might be actually out of control for the Fed. But I'm with the Fed on this one because the Fed has direct control over this inflationary force, which is one of the strongest, if not the strongest, inflationary force in the economy right now. There are three main inflationary forces in our economy right now. The first is monetary inflation, the second is supply side inflation, and the third is demand side inflation. Monetary inflation is the devaluing of a currency, and a currency usually devalues because there's money printing. And right now we are experiencing a lot of money printing by the Fed from their quantitative easing. So when they print these huge amounts of money and continuously print this amount, they are devaluing their own currency, which is the US dollar, and that is why we have monetary inflation. With their tools and policies, the Fed has direct control over monetary inflation. And monetary inflation is one of the main inflationary forces in the economy. The other two inflationary forces, which is supply side inflation and demand side inflation, which we are currently experiencing right now, though they contribute to inflation, I do not believe they contribute much to inflation, especially in the longer run. Because for both the supply side inflation and demand side inflation, both of them are mainly caused by the pandemic. The pandemic affected supply chains and affected demand. And that is why now, in this year, after we have recovered a bit from the pandemic, demand has picked up faster than supply. And that is why in this year, we have experienced both demand side inflation and supply side inflation. But I think that in a couple of months, this supply side and demand side inflation will taper down. So fast forward a few months later, the main inflationary force will be monetary inflation. And that is what the Fed has direct control over. And if the Fed has direct control over the main inflationary force in the economy, they are in a better position to forecast inflation. Because after all, inflation in an economy is determined by inflationary forces and deflationary forces. So the main deflationary forces in our economy is, the first is technological advancement and the second is productivity. And these two deflationary forces tend to remain quite stable over time. So if we were to forecast inflation in our economy, we would just be comparing the inflationary forces in our economy versus the deflationary forces. And whichever forces is stronger will determine whether we have inflation in our economy or deflation. So since deflationary forces tend to remain quite stable over time, we just need to pay more attention to the inflationary forces in our economy. And because demand side and supply side inflation is likely to taper off in the coming months, the main inflationary forces left in the economy is monetary inflation. And because the Fed has strong control over monetary inflation, the Fed is perhaps in the best position to provide an inflation outlook in the coming years. And that is why I am on the side on the Fed when it comes to inflation. I believe that inflation is transitory in nature. What are your thoughts on inflation? Do you think that inflation is going to be more transitory or more persistent in nature? Let me know down in the comments below. If you have enjoyed this video, smash that like button because it will really help the channel grow and allow me to produce more content such as this. And if you are new to this channel and haven't already subscribed, make sure you subscribe to this channel because each week I release new videos about investing, trading and the stock market. I'll see you in those other videos. To your financial success.